Hey traders, how's it going? We're going to be going through our little weekly outlook here because we had some serious action at the end of the week last week. We talked about it a little bit during our podcast on Thursday and Friday, but this is price action that we need to take note of because it is transformative, it is shifting, and it can definitely change the parameters and the perception of the market. So last 2 days we had some nice steady selling. So what we're going to do is we're going to take a look at the price action, the levels, what we're expecting this week, headlines, earnings, and so on. We're going to dive on through the usual song and dance. Look, the last 2 days pretty much looked like mirror images of each other, except Friday we saw a little bit of weaker action on the close, finishing closer to the low here, actually at new lows. We broke a lot of levels on both the SPY and the Qs. Does this feel like we could get a little bounce, a little, maybe a little bull squeeze or bear trap, bear squeeze? Absolutely, it's definitely possible, but we need to see where we're going to open up on Monday. First of all, we'll see how the French elections finish. Looks like Macron's still the favorite, and if we do get a surprise Le Pen win, then all bets could be off. The euro is going to see some serious weakness, and you're going to see some serious action there. But first and foremost, let's take a look at the market's cues. Broke their January lows, started reapproaching the lows for the year. Definitely the weakest of the bunch with rates doing what they're doing. SPY, though, did break its range and kind of getting down to these January lows as well, though we do still have some room to give back. They've been holding up a little better. IWM, meanwhile, in open air as well, broke its range here, kind of getting down to a little, not even really a level, just kind of where we bottomed out at in March, getting back down to our yearly lows in the IWM Bastard Child as well. Dow, through levels, kind of in the same kind of range as the SPY. So the market had some serious selling. This was serious selling over the last 2 days. This was steady, just, exiting. And Mike had some interesting theories that, we'll talk about briefly because this definitely did almost feel like a little bit of, not margin call, but share rotation, a reallocation to the extent. It all started with the Netflix earnings. The Netflix earnings crater. You see people like Bill Ackman and other large firms, hell, even California lost hundreds of millions of dollars in their pension fund on the Netflix position. And so what happens when these over leveraged companies or corporations or individuals get a large position smacked like this? If they're having a margin call, what they need to do is they need to sell winners. And so we didn't just see the weak stocks selling off. We saw the industry leaders and the market leaders in generals getting smacked. And that's likely because people were selling those positions to cover for losses, to keep capital, to keep things from getting margin calls, or maybe they were just panicking that in this upcoming big week of earnings, they don't know if they're going to be the next Netflix. So you had the even the war stocks, Mosaic, BTU, hell, even Apple, Tesla, all the big boys, Amazon, Netflix, obviously, Microsoft and Google breaking new lows. You had a lot of stocks that were holding up, doing better, hell, even going up, like Costco, even starting to take on water and show weakness. So that is definitely something that we need to pay attention to. Don't just gloss over that and say, it was just people getting stop triggered. That's not what that was. That was pure, just grinding, selling all day through the last 2 days. Now, again, we'll see where we open on Monday, but you should obviously know where a lot of the levels are. This is going to be a major level sitting around here. I wouldn't be surprised if we did a little bounce above it. Monday is going to be very quiet, no economics, no planned headlines, so we can see what we get on Monday. But it's likely to be a little quieter. Maybe we get a little bit more of a squeeze up, or just a choppy day. But we'll see. We could just continue on and continue selling. I do expect us to test the lows at some point soon. I do expect us to make new lows. This market is far from over in terms of frustration and pain. But that's going to be your first level. Your next level, maybe this little double bottom here from March. I'd really be also looking at kind of this inflection point where we saw that gap off, and this is kind of something that we've seen this year. So take note of this price action. You get this heavy selling, and then you get a massive gap down. And in this case, you did get a little extra push, but then that kind of becomes a temporary bottom. In this case, you got a nice amount of selling, massive gap down. That was the temporary bottom. So just keep note of that, because that can be the thing. The market won't necessarily just go straight down, even in a bear market. So that's something that we need to take note of, because that is a scenario that we could see. We are still making lower highs for the most part in the market. And like I said, the Qs are much weaker. So we need to take some indication of how weak this market could be from the Qs, because with what rates are doing, rates are still trending higher. They're still exploding higher. We're making higher lows and higher highs in the 10-year, in the 30-year, and the velocity of these rate hike expectations is taking a toll on the market and on bonds. I mean, look at the HYG and JNK, both made new yearly lows. If I pull up a long-term chart here, let's pull up a long-term chart of these bonds. I mean, this is ugly. You know, you've got maybe a little support down here, maybe you'll have some more down there, but we are making some new lows here. We are below this sell-off here in 2018 on the bonds. And even if you pull up the TLT, you know, where's the stop here? You know, now this is going to be the final week kind of before the next Fed meeting. Maybe we get a little bit of chill time in bonds, maybe at rates, maybe, but the expectations for rate hikes continue to escalate. Nomura on Friday said that they expect a 75 basis point rate hike in June and July, following a 50 basis point in this upcoming meeting on the 4th of next month. So you're getting more hawkish expectations out there, and we still don't quite know what's going to go on with the balance sheet. So that's going to be something we need to pay attention to as well. Do we start to see QT coming in this meeting, or is it going to be next meeting? The Fed's usually been pretty transparent about it. This thing, we're still not quite sure. I think we're largely just pricing in the expected 50 basis points next meeting. But what happens next? What are we going to hear? We're going to start to enter that Fed blackout period soon, so we won't hear from them as much going in. So what's the market going to do with this expectation? So that's a lot. It's a lot on the plate of the market, and we're starting to see the cracks here, especially with the divergence we saw between bonds, the bond market. You know, look at HYG exploding lower, and and rates meanwhile of treasuries exploding higher on more hawkish expectations compared to the market, which was holding up better. You had that dislocation. Market seems to be playing catch up now. Does it continue lower? We'll have to wait and see. Obviously, price is the only thing that pays. That was a pretty hefty, quick acceleration down over the last 2 days, so I wouldn't be surprised as a mean reversionist at heart to see a temporary bounce up before we reload lower. But you saw a lot of put chasing out there. You saw a lot of people taking part in this downside action, and that's something that we didn't see before. The VIX was stuck. The VIX was stuck in the mud. It was not participating in the market action. Suddenly Friday, it woke up. That's something to note as well. If volatility starts picking up, if we start seeing the options market really start to participate in that downside as well, like it looks like it is, now we actually could have, finally some of that selling coming back, some of those people putting back on those shorts, some rotation, whatever. So something to keep in mind. Again, we also need to listen for the French elections on Sunday. If Le Pen wins, big downside risk for Euro. Doesn't seem like she will, but it's something that we need to monitor because it will affect the markets. It will affect European markets and U.S. markets. And even if she does win, the parliamentary elections there aren't until June, but there's still going to be a lot of capitulation from the strong Euro crowd probably. Russia's going to have some more stuff going on. Blinken and Austin are likely visiting Ukraine today. Listen for any kind of words from that or any kind of capitulation there. And we've had a lot of fires going on. Russia had several large industrial and military complexes that were on fire. The U.S. and Canada have had several food plants catch on fire lately. This is getting into a very hairy situation. Tensions are starting to escalate again. And we know that Russia is looking at early May to declare a victory of some kind for a land grab, most likely. So we could see headlines continue to roll in there. And then not only that, you've got food protectionism soaring again. So Indonesia, one of the largest exports of, I believe, palm oil, one of the cooking oils, stopping exports. And so now you have UK stores starting to limit the amount of cooking oil you can purchase in a trip. And so foodstuffs and the impending food crisis still on the horizon. There's still something that's there and pressure to be seen. Plus, you have potential Sweden and Finland applications for NATO in the coming weeks. There's a lot of potential for headlines that could also continue to roil that up. Now, the U.S. markets rather aren't necessarily paying attention to the Russian headlines as actively. We're not seeing a one-for-one move. We're starting to price in those expectations, but escalation is something to listen for, and it's something that the market will pay attention to. Now, I'm not going to spend any more time on this. This is speculation to an extent, and what I want to look at is what's coming up here, what's coming forward this week. So other than potential headlines from what I talked about, we do have economics this week. None really on Monday. Tuesday is going to have durable goods orders, Case-Shiller Home Price Index. We are starting to see a little cracks in the housing market there. We'll see as affordability is continuing to escalate. Wednesday is going to be a little bigger. We're getting there. Retail inventories, international trades in goods, 5-year note auction, nothing too noisy. Thursday, though, we do have GDP numbers. Going to be very curious to see about that. And then Friday, we get that PCE deflator index, the Fed's favorite inflation tool. Why would we think that it would be low at any point yet, especially with the Russian war continuing, supply chains continuing to be disrupted from Shanghai lockdowns, all sorts of issues? I would expect inflationary numbers to continue to be escalated. And then next week, we'll have the Fed meeting after that. So there's a lot to look forward to. Now, this week, we do have a lot of earnings as well. Tuesday, well, let's just go through the list here so you have it. Obviously, you can find these on your own as well. Monday, we have Coke. I'm very curious about Coke because it's been an outperformer in the market along with a lot of the other consumer staples. ATVI, Activision Blizzard, they're being acquired, so it's not going to matter. But I'm curious how they're doing. Tuesday, now we do have UPS. Mike Lake's looking at UPS earnings, kind of an indicator of how much Americans are shipping and consuming to an extent. You have Valero, a little energy in there. You get EDU, a bullshit China nonprofit company. PepsiCo, another consumer staple food kind of area. Sherwin-Williams, this is another company that had issues with inflation and talking about supply chain stuff in some of their previous earnings. JetBlue, CEQP. You get a couple of earnings on Tuesday. After the close on Tuesday is where we start to pick up. You get Google, you get Microsoft, two big boys there. You also get QS if you want some EV stuff, Visa, Chipotle, Capital One, so ENPH for you solar people, General Motors. Get a lot more bigger companies Tuesday after the close. Wednesday morning, you have Hess, Humana, some big healthcare, Boeing, a couple like that, ADP, Harley Davidson. You get the picture. And then Wednesday after the close, you get even more companies. Ford, Molina, big healthcare company, Spirit, Qualcomm, Upwork, Meta. Meta's going to be very curious, breaking new lows here. Lending Club, all of Aflac, a bunch like that. Thursday, Comcast, Eli Lilly, Jinko Solar, MasterCard, McDonald's, Merck, Northrop Grumman, Overstock, BTU, a coal company that's been doing very well, Southwest, Twitter, a lot. Everyone's going to be watching that Twitter conference call, see if they talk about the Elon bid. And Thursday after the close, you have Amazon taking a little free fall here, Apple, Roku, United States Steel, and then Friday you have a couple others, AbbVie, Chevron, what was that, Colgate. So we had a lot of big companies reporting this week from a lot of big sectors. This is going to be a big week of earnings. Very big week. It's going to be very important for the market to see, what things are looking like for these companies, and it's definitely time to be paying attention. So that's what we're looking at there. Some of the other commodities before we dive into some of the stocks I'm looking at. Look, oil and gas kind of still chopping around here. Some of it will be headline dependent because there are rumors that the EU will put out an embargo on Russian oil after the French elections. That would be interesting to say the least. I think there'd be a lot of scary scenarios for the EU, definitely high upside scenarios for oil and gas if that does happen. But we'll see, what ends up happening there. If they break 100, you're likely going to pull back, but I still see no reason to not have a longer-term bullish thesis on oil and gas so long as the war looks like it's going to continue. Gold got a nice little pullback here, and I think that's largely due to strength in the dollar. Dollar strengthening against things like the euro, against the pound, against pretty much every other currency out there right now, because where else are you going to invest your money other than treasuries and the US dollar? So whether this is sustainable or not, whether this is just largely due to the market correction, we'll see. But it's definitely been a strong dollar, that's for sure. We'll see if that can continue. Bitcoin continues to move with the market. Who cares? It's Bitcoin. Anyway, so some of the other stocks I'll be looking at this week, other than some of the earnings ones. So look, let's talk about a couple of these quickly, rapid fire. Obviously, I'm going to be watching a lot of the commodity plays. Alcoa had their earnings. They had a really harsh 2-day drop. If I'm looking to dip buy a company, it's going to be ones that were strong regardless, that likely just had some rotation and some margin selling some selling due to margin calls in other positions. Ones that are still probably going to see price escalation with supply dropping, with supply chain issues. But even then, I wouldn't be just blindly buying. Stocks like BTU and coal, Mosaic, and CF in terms of the fertilizer play, things like that, I'd still be watching them. I think there's still interest there. HBK exploded on Friday, completely missed this. A small price energy company that's been running lately that I've played before. EQT, some liquid natural gas, might have some plays in there maybe. LNG, another option in there. Lithium and uranium got smacked. These two plays are tough because they can't really get going. They kind of grind, so they're tough to want to just buy. But Lockheed Martin obviously pulling back a little bit here. But there's a lot of plays with surrounding the war and the subsequent supply issues and price hikes and things like that that I think will still have opportunity. We'll see in which way that goes. Now there are still what I'm kind of calling the dog shit companies that are breaking for new lows that I don't want to buy. Disney, don't want to buy it. It's rolling over. It's falling through new lows. I see no reason to want to own this thing. It's at an inflection point here, but I don't see this as being an attractive investment. Look at this price action. You don't want to own a chart that looks like that. Netflix, why would I want to own that? PayPal breaking through new lows. This has been a ATM machine on the downside lately. Starbucks with all their unionization efforts breaking new 52-week lows. JB Hunt had good earnings and it couldn't get up, and now it's rolling back over to lows after this hefty drop. Shipping's not looking attractive right now, and so JB Hunt looking rough. DWAC was one of the only companies green yesterday. I think this is one that's going back to zero with how mismanaged that's been. WBD Discovery, now that that merger spinoff is done, breaking lower. GoGo, I'm going to be watching. I don't know yet, but Elon Musk Starlink signed a little contract with a like 77 smaller jets or private jet company, but still that threatens their business of air in-flight Wi-Fi. I might watch them. The semiconductors are breaking lower. I don't want to own the semiconductors. Look at this price action. They're breaking new lows. You don't want to own charts that look like that. They look like that for a reason. And especially in a high rate environment, why would I want to own a tech stock like this? So SMH breaking for new lows. Sure, if you think there's going to be a little technical bounce, maybe, but got to watch price action and cut your losers quick on those because there could be a lot of pain ahead. Now, stocks I don't quite know what I want to do with yet, but I'll still be watching. AT&T dropped on Friday after popping on Thursday's earnings as a result of Verizon's miss on Friday's earnings. I'm going to watch both those stocks. They keep getting up there, then they keep getting smacked down. So I'm going to watch to see if they base in here at all. They're kind of in a chop zone, but AT&T is closer to the higher end of that zone. Costco, which has been leading us, had a rough 2 days with the rest of the market. Still kind of sitting up here. Obviously, it's very inflated. Pfizer dipping below that 200-day, so I want to watch and see if we can reclaim it. But Pfizer's been kind of a winner in the healthcare sector for sure going forward. CrowdStrike, it was disappointing. The entire cybersecurity sector, disappointing. Palo Alto, you can look at the bug ETF, whatever. But if we think cybersecurity tensions between U.S. and Russia continue to escalate, maybe we see more potential here in the future. It's not something I'm trading yet, but it's something I'm watching. Nucor got slaughtered after their big earnings pop. Several engulfing candles here, so there's no way I'm buying, but I'm interested in trading it. Snapchat did a little flag at the bottom here. It's a little almost triple bottom after its earnings. So I'm going to be watching Snapchat very closely, see if there's a move lower. Newmont Mining, they dip bought the miss on earnings. Walmart had a nice drop after breaking out. There's just a lot of stocks that were breaking out and getting smacked, and now I think there's just a lot. There could be a lot of potential for short-term trading on these. So these are just some of the ones that have been in play. They continue to be in play. They're like on my watch list, I think, every single week, but they give a lot of the same opportunity. They give great opportunity. Tyson was good, and then that one got smacked. There's a lot of stuff moving. A lot of stuff got dragged down with the market. We have no clue where the market's going to go this week. No one does. But I think there's going to be a lot of opportunity if we can manage our risk, know our levels, know the upcoming headlines, play the earnings, and really protect your capital. So it's going to be interesting. We'll see you Monday through Friday for the morning market analysis, and then also for the 1 p.m. Vant Rant. There's going to be a lot to talk about, and we'd love to see you there. But good luck out there. I hope you enjoy the rest of your weekend, and as always, safe trading.